All right, welcome to StockPlease.com. This video is called What is an Option? All right, an option is, let's start with a stock. What's a stock? Okay, it's a piece of paper. Okay, that's all it is, piece of paper. You may never even see it. Okay, you tell your broker, okay, I got $500 and I want to buy let's buy some Apple. Everybody loves Apple, right? At least that's what the earnings tell us. So we got $500 worth of Apple. Okay, depending on the price of it, at this point it's probably 2 shares. With the way that stock's going at this time, it's around $200 a share. Okay, anyways, you tell that to your broker, you buy it. Next week, let's say it's $200 and next week it's $220. Okay, you bought it here and you sold it here. Okay, now this money is going to be reflected in your brokerage account. You'll never touch or see this piece of paper. It's imaginary. Okay, all they wanted to see was your money. If your account balance warranted it, then you were able to make these transactions and you profited. Okay, yay, you're plus money. Hoorah. All right, so what is an option? What's the difference between a stock and an option? An option is also, boom, it's a piece of paper. Okay, just like a stock. You'll never see it, touch it, hear it, smell it, nothing. All right, so it does the same thing. Does the same thing as a stock, in that a stock does this, right? Stock goes up and then the stock goes down and the stock goes up, blah blah blah, over and over for hundreds of years. It keeps doing the same darn thing, right? Up and down, up, down. Options do the same thing. Okay, they go up and they go down. Okay, now there's 2 kinds of options. 2 kinds. Okay. Well, before we get to that, let's say this. It is a fact that the price of an option will go up if the price of the stock goes up. Okay? Generally speaking. If the price of the stock goes down, then an option can also follow that. Okay, so now two kinds of options. Don't get sold on any one kind. Okay, if you think that from point A, which is, let's say today, from today to next month sometime, if you think the stock's going to go up by next month, today it's here with no direction, and next month you think it's going to be up, you're going to get a call option. You're going to buy one. Okay, call option. If you think that it's going to go down, you get a put option. I don't even need to put this option. You get a call or a put. Okay, how I remember personally which one's which is, I have this little saying that I like to call up my friends to put them down. All right, I don't actually do that, but I think it's funny. All right, a call is up. Okay, A put is down. All right. Price of Apple. If we think it's going to go up, I'm going to buy a call. So the option follows the stock. If I think Apple's going to fall, I'm going to buy a put, because as Apple's stock drops, my put goes up in value. I make money. The more that stock falls, the more money I make with a put. Okay. The more the stock rises, the more I make with a call. It's that simple. You just got to remember, up and down, call and put, call and put. Call up my friends to put them down. Okay, call is up, put is down. All right. What a great example, huh? Okay, Apple stock around $200 right now, right? We've got, it's February 10. That's the year and the month of the next expiration. Because January, it's too late in the month. It's already expired. Options expire. Options expire. They die. They die. Okay? They only last for so long. You have to guess what you have to do with options to make money. Okay? You have to guess by a certain date, right, that they will be a certain, the stock will be a certain amount. Okay? If you guess correct, cha-ching. That's a plus sign. You make money. And where the power comes in is that Apple stock's $200. If I get a February option for it, call option, let's say it's 200. I think that maybe by the February, especially after earnings today, there's a chance it might go up to $215. Okay, that was its high a couple weeks ago or last week or something. But it might just bump its head back up there again. Okay, so we got a $15 move here. Almost 1%. I mean, almost 10%. Sorry, $2 is 1%. $20 would be 10%. Anyways, let's just say for grins and you know what, that it's a 5% move we're looking at. Okay. Now you could whip out a bunch of money. Okay, let's say we want 1,000 shares, right? We're going to need $200,000 to get the 1,000 shares, or we could buy some options, because perhaps the February 200 and let's say $220 strike right now. Let's say that that's 75 cents, just for the heck of it. Okay, so 75 cents. Much easier to do than $200. Okay, one option controls 100 shares of the full price stock. Okay, 100 shares. One option is 100 shares at 200, right? So we're talking, we got what's that, 20,000. That would cost us $20,000. Right? To control, is that right? Yeah, 4 zeros. $20,000 to control 100 shares of Apple stock. That's a lot for people that don't got that kind of money. At 75 cents, okay, you do have to multiply that times 100 too. Okay, so you're gonna end up paying for one option $75. Percentage wise, you're going to reap the same profits, if not better, than somebody would with the full price stock. Okay, so where your leverage comes in, or what really makes you money with options, is that with that 5% move that we're anticipating. Okay, an option is going to move a certain amount. It fluctuates, of course, but it's going to move a certain amount for every dollar that that the stock goes up, okay, for every $1, then the stock's going to move up a fraction of a dollar. I mean the option is going to move up a fraction of that dollar. And let's just for where were we at? 75 cents? 75 cents. 0.75 cents. Okay. Anyways, if that thing moves up, let's say the option is going to move up 25 cents for every dollar. 0.25 for every dollar the stock goes up. Option's going to move 25 cents. All right, so we thought the stock was going to move up 15. So 15 times 25, we're looking at almost $4, $3.75. Okay, something like that. So if our option was 75, and we end up with the price of our option at 375 by the time that thing hits 215, you can see that we're looking at about 4, maybe 5 times. That's a 500% return, roughly. Okay, this is just in my head, so even if it was 400%, are you going to cry? Let's say it was 400%. Remember, the guy who's buying stocks going from $200 to $215, right? Okay, so he's going to make $15. 1% was $2, so he's going to make about 7%, which we already just banked on 5. Excuse me. Okay, so anyways, you can see the clear choice for me is options. I want 400%. I don't want 5 or 7%. Okay, that's the way I am. All right. That's why you hear or read about, you know, one day I make 200%, 400%, whatever, 100%, 150. It's not hard. You've also maybe heard me or read about when the market is the Dow. Okay, everybody hears about the Dow. It's on TV. Down. Okay, 216 points recently. What is that? Maybe Friday. Last Friday. It's Monday. Anyways, you know, most people, their retirement's sitting there losing money with this market. Okay. I, on the other hand, remember that there's 2 kinds of options. One to buy if the market goes up, and one to buy if the market goes down. So, I last week got the signals from StockPlease.com newsletter that, hey, the market's there's more sell signals than buy signals. Okay, so I'm going to just naturally go with the odds. And so I went and I bought some puts. Okay, I bought them at 40 cents. 40 cents, okay, and in 2 days I sold them for 89 cents. Okay, I doubled my money plus. Okay, so it's better than 100%. Maybe 115, I don't know, 112, whatever that is. We could do the math. I'm not gonna. All I know is that for people to make 100% in 2 days up their stake, you know, I don't know what you think is good, but to me that's good. Okay, 216 points down in the Dow. The Dow was, geez, what was it, 10,000? Maybe 400, somewhere around there. Look at how small of a percentage that move was. All in all, I think for the week, it went down 2%. Okay, now if I was playing, and of course, to buy this Dow thing there, you're going to need a bunch of money. Okay, remember, I just bought for 40 and turned it into 89. Okay, I don't have to buy as much. I don't need as much money. That's what's so attractive for everybody that doesn't have a lot of money, who thinks that you need a lot of money to play the stock market. It's just not true. Okay, so let's make this what is an option number 1, and I'll go over what I just recorded, and if there's a need, I'm gonna make a number 2 video. I don't think there will, but all you have to know is that there's 2 kinds of options. One for the market going up, one for the market going down. The newsletter tells you the exact price at what to buy a stock or trigger a stock buy. You put in your order to go up or down according to the newsletter. It's that simple. I'm doing all the hard work. I'm telling you the timing for everything. All you got to do is follow simple directions. If you can't do that, well, I don't know what to tell you. You know, it's real easy to do. I'm doing it. You can do it. So that concludes this video. Thank you, and I hope that gives you a better understanding. If I review this and I see that I need to explain anything clearer, I'll post it, okay, so you can see it. All right, thank you very much.